What is up, everybody? Today is Tuesday, August 5th, and I took one trade today, and that one trade was a winner. So coming into the market, I came in with kind of a bearish bias at first. Even though here on the 4-hour chart, you could see that we had bullish order flow, but overall the structure itself was bearish. So coming down to the hourly chart itself, you see that we had news at 10 o'clock, which gave us this massive gap down right here, which from this level right there down to that was where the candle closed and opened. But first and foremost, coming into that first macro, I was bullish because we were holding this 1 hour fair value gap. We invalidated that bearish fair value gap right there, and I was targeting that 450 level right there on NASDAQ. So during that first macro, I was bullish. Now, as you can see, I waited for after 10 o'clock just to see what the reaction was. So for that first macro itself, I did not feel confident in taking a trade. So let's turn on the macro indicator here, just because of how price was moving. So I was bullish, like I said, and there was a bullish IFEG that got created, but due to the nature of how much we, rejected, I decided to hold off on that trade. I did not want to take it, even though we ended up getting a secondary inversion fair value gap right here in the AM2 session. The 15-minute also pointed for us to be bearish as well. As you can see, we had this move on up, failure to tap that high, gave us bearish structure here on the 15-minute time frame. So all of that mixed together made me not want to take any kind of setup during that macro itself. Now, coming into the AM3, right, the 1050 macro, at this point, I was bearish, and I was looking for price to reach that 092 level, which was the fill of, I believe, this 1 hour fair value gap. Yes, it was the fill of this 1 hour fair value gap, which as I sometimes use as a draw on liquidity, because price will come and mitigate these fair value gaps that are left behind. And overall, as you can see, right, we had a very big displacement lower, clear bearish order flow, bearish structure. 4 hour, it was still kind of bullish, but with bearish structure on the higher time frame. So that, including the 15-minute, I obviously was looking for short setups during the 1050 macro. So let's take a look to see if there was anything that formed. I don't think there was, because I did not look at anything that looked appealing. There was no fair value gap that got invalidated until the very end. So this one right here got invalidated at the very end, right there. So I didn't take it because at this point I was like, all right, I'm going to get off the chart. It's probably going to want to retrace a little bit more at this point and then come down. So thankfully I did not take this setup, but it is according to my model. This is the setup according to my model, and it would have given a 1 to 1.55 risk to reward. But unfortunately this got stopped out. I know some of my students took this one and then they waited patiently to see what else was going to be coming after the fact. And it's unfortunate, right? It's unfortunate that this ended up getting stopped out. Now, coming into the New York lunch macro, same thinking, bearish order flow overall, but with the fact that we already got manipulated here and we had a 15-minute bearish fair value gap that held, and we didn't get any strong displacement lower below the swing low. Yes, we have a wick, but there is no strong displacement lower. So I'm looking for a very strong move out of this 15-minute fair value gap. But because we didn't get that, at this point in the New York lunch session, I was not going to take anything. I wanted to see a strong continuation to show that the market did want to head lower. And so that's why I did not take anything. I marked this out just to see what it was going to do. And that one also got stopped out. But like I said, because of the lack of displacement below this swing low, and then we're coming back up again to this area, should make you cautious, because if price really does want to head lower, there's no reason why it shouldn't displace below the recent swing low, especially because we're delivering outside of a 15-minute fair value gap. So now coming into New York PMs, this right here at the 110 macro, I was not going to look for any short setups. And the reason why was because if you look, at this point, we held this 15-minute fair value gap that got created during the lunch macro. So that came down, held, and then as you can see, we have a higher high, a higher low, and we're starting to head on higher back into this 15-minute fair value gap. I was not going to look for any kind of long entry until we get an invalidation of this bearish 15-minute fair value gap to really give a strong confirmation that we're heading higher again. So I had to be a little patient little picky with what I was looking for. So obviously here, I'm not going to look for any kind of short setup. And I don't think any short setup or there did. This one right here. This got invalidated, became a bearish setup. So looking for shorts. But because it goes against the higher time frame structure and order flow, at this point, I did not want to take that. So there was no reason to take a short here. And as you can see, that also got stopped out. So now coming into the last hour, this is the trade that I actually took, because overall, you know, here on the last hour, we did move into this 1 hour fair value gap. So let me close this so you guys can see it better. This 1 hour fair value gap right here, we had a very nice swing up into it, creating a swing high. So a lower high, rejected out of it. On the 4 hour, it looked bearish as well, because at that point, on the 4 hour, we invalidated this bullish 4 hour FEG with this candle right here. So now this 2 p.m. candle is starting to form a bearish candle. So we want to see on the 15-minute time frame that the order flow also aligns. What do we end up getting? We have a bullish 15-minute fair value gap that gets invalidated, respected, and then on the way down, we have another one created right here, where during that last hour macro, we actually tap into and reject out of it. So now the trade that I took was this 1 minute FEG right here. It was very risky, of course, because it was a very tiny FEG. It was only one tick big, but because everything aligned so well, I figured, you know, it's worth the risk. So I took the trade, and I took off pretty much all of it at a 1-to-1 because number one, I was already exhausted looking at the price action today. I also don't have a good track record with the last hour macro, so getting a 1-to-1 was more than enough for me to be able to put myself at a green day today. So here is the invalidation. You could have taken the retracement back up into it. Your target could have been this swing low for a 1-to-1.45. Overall, the trade did hit a 1-to-2. Your runner, if you put it to your stops to break even, your runner would have hit a max of 1-to-3.23. So as you can see, if you wait for everything to align, it always works out. Okay, so that's why this trade right here was probably an A+ setup, the best setup out of the entire day, in my opinion. This did give a sort of A+ setup, but because the 4 hour had yet to invalidate that bullish fair value gap, you know, I don't know if I could say that the 4 hour was also bearish. It was still bullish in a sense, in terms of the order flow. But here at the last hour, once everything aligned, every single time frame was bearish, you can see that worked out. If you held and didn't care about putting your stops to break even, you know, that trade obviously hit a 1-to-5.5 pretty much. It hit that 23.092 here in the after hours at 4:30, unfortunately. But regardless, you know, the trade setup worked. So hopefully you guys ended up with a green day today. You guys were patient with this price action. It was not easy for sure. And I will see you all tomorrow. Peace.